Hello and welcome to another episode of Margin Called, the only channel on YouTube dedicated to controlling your losses in the stock market. I apologize for not uploading anything as of late. I've been out of town on vacation. You'll see in the next chart that I'm about to show that I actually did manage to get in some semi-decent good trades before the Labor Day holiday kicked in. Unfortunately, I'm having a little bit of a rough time going into September. It's just the beginning of the month, and I'm already having some profitability issues. But let me just go ahead and show you what a great month I had, at least in terms of August. It's worth noting that I really didn't begin seriously trading futures with live money until last month. I've been very successful at that. I'm still trying to make some repairs to my option account on Webull. But today I had a little bit of a bad day, a little bit too much forcing, and that's mostly because of what I thought I saw on the charts. And I probably, after the first loss or so, just should have laid off the gas. As a matter of fact, as the VIX is beginning to peak up a little bit, it might be a good idea for me to just lay off the gas in general, see if I can get a better idea of how to adjust with the increased volatility, because price action was definitely choppy today. I was getting stopped out relatively easily, so I may need to just in general kind of revisit the ways that I've been making money over the past month, and especially given some of the questions, anxiety, and uncertainty around the month of September in general. But with that being said, let me just show you a little bit about what I was looking at mostly today. And this is a 5-minute chart of SPY. I really thought that we were building a rising wedge pattern, and it was basically building strength to go punch lower to the downside. I'm very bearish, and I'll go into that in a little bit more detail later. But as you can see, it looked like that we were going to get that really strong flush into the close, but it was eventually bought up. And there's another chart that I'd actually like to show you all. This is the one that I have for SPX. I have basically just two moving average lines. The blue one is the 20, and the green one is the 200. I've got the, I think this is the price percentage oscillator that I've got on here, so it's a little bit kind of like a RSI, but maybe just kind of like a different way of looking at the data as it's happening, because I'm definitely trying to figure out ways that I can refine my option trading strategies, just because I'm clearly inconsistent, at least from an intraday perspective. I have a little bit better luck when I'm holding overnight or in different types of swing or position trades, but intraday it's been very, very difficult for me. And I actually think, despite all of the selling that's been going on, and we'll get into this in a little bit more detail in the charts, but I do think that we are going to be set up for a bounce going into tomorrow, Friday. And I guess we'll potentially have something of some positivity going into the weekend. And let me show you what I see here, at least on SPX. So the 200 moving average here, this green line, we were originally rejected on it later in August. I think this is like the 24th, where we had that strong open, but then it just kind of flushed throughout the day, a real good hard flush. But as you can see, price came back down to that level, and it seemed to be support at this point. And what I find bullish is just the fact that we still have the 20 moving average over top of the 200. And it looks like price basically, even though I thought it was a rising wedge on a 5-minute time frame, when you pull out and when you look at something like a 30-minute, you can see here that it looks like it might be a little bit of a, if this is the flagpole, here is our flag, and it looks like it's just beginning to hug the 20 moving average. Now, I technically have a short position in an entirely separate account that I don't really cover on this channel, but I did decide to grab some calls that expire on Monday, just in case, basically as a hedge for my short position, because I do think that we might try to reclaim some of these levels up here. I guess on SPY it would be like the 448, 449 zone where we originally broke down. So we might try to see a little bit of a push tomorrow to get to that level. So definitely just wanted to make sure I shared that with everyone. But I think more importantly, what I would like to do is just kind of like share my analysis. And this is something that I've developed over the past couple of days. In fact, on August 31st, I took a look at my charts for one last time. And I think I saw something across just the daily, the weekly, as well as the monthly. And this is nothing particularly new. If you've seen other people on different YouTube channels talking about this, there were some things that basically built up by the end of the month in August that would suggest that we might be heading towards a sharper correction, maybe something like 10%. That's kind of what I'm pricing my puts in for. So first off, and let me just actually hide all of these drawings that I have on my chart, but this isn't really a great example. It's not a textbook, but we have seen these types of things before where you have a head and shoulders or maybe even an inverted head and shoulders, but it's not really like an exact match. So I'm kind of thinking at this point that we have a left shoulder here, we've got our head, and this is a potential right shoulder. Something else that was brought to my attention was the fact that if we do a Fibonacci retracement from our high, this was back at the end of July, and our low in August, it's basically a 78.6% retracement. I'm not as familiar with these types of retracements. I'm not sure if that means it's as great an opportunity for shorting the market. I was always under the impression that 61.8% was where you would want to either buy at support or short at resistance. But we do, in fact, have what appears to be a 78.6% retracement. That's a real mess on these charts. But I think more interestingly, and let me see if I can open this up on the weekly. And this is a little bit different for anyone that has TradingView. But what really caught my attention was the fact that if you look back at the end of 2021 going into 2022, we did have a little bit of a pullback here going into the new year. And it kind of looked like things were beginning to repair themselves, at least as far as March goes. We had a pretty strong rally, as a matter of fact, going into April. But as soon as April rolled around, I guess you could kind of call this, it's almost a little bit of a gravestone doji. But, and this is a weekly time frame again, but from there we had massive selling for, sustained selling for weeks basically. Of course, you do have the occasional wick here and there, but just very interesting that was really kind of like a top for the market and really just the beginning of the bear market in general for the year of 2022. So if you look at what we basically did at the end of August going into September, so as you can see here, we basically failed to close above that red line. I kind of have that red line marked as where we would really try to want to get above from a positive perspective, and we're basically, at least on the weekly time frame, printing a lower high at this point. Again, there's a whole lot of things that we would have to see shape up. Quite frankly, I'm comfortable with putting risk on at this point, but what really caught my attention was what I was seeing on the monthly. And if we take a look at this, it's especially interesting. I'll hide my drawings again, but I'm not the only one that made an observation about this, but it does look like, at least for the month of August, that we do have something of a hanging man for that month. And of course, at least as of right now, it looks like September is a little bit bearish. But what I think is even more interesting, if you compare the high from 2021, and I guess this is technically 2022, again on SPY, we do have what looks like a potential. It's not textbook again, but it's a potential double top on the monthly time frame. And even though we've been able to kind of very closely recuperate all of the gains, or all of the losses, I should say, from 2022, if we look at our MACD, this is just a classic case of regular bearish divergence. Again, I've been wrong about this type of stuff before, but it was something that really popped out to me, and quite frankly, maybe if it is a double top, we could be going back down to the 250 zone, I want to say, after you do the calculations between the head and the neckline. But 250, and of course, this would be something that I would see happening over the course of 2024 for the most part. But I would think that that would be in the cards if my technical analysis is right, so to speak. And if we look at, again, this is the MACD that we have on here, we do kind of begin to see the MACD is losing momentum on the weekly time frame. Still above the midline, admittedly. On the daily, under normal bullish circumstances, this could be a really unique buying opportunity just because you kind of have a little bit of a double bottom type of thing going on here. But at the same time, we're still seem to be struggling to get over the midline. And it does look like it could fall through at any point. Again, we'd have to wait for price action to confirm all of this. But I'm perfectly fine with getting a position in early, and I'm doing things to hedge and reduce risk and whatnot. Again, on the 4-hour time frame, again, I have extended hours activated, but you can kind of see that depending on what time frame that you're looking at, you're either breaking below the midline or you could be about to break below the midline. And it goes for all of the other different time frames as well. So that's just something at least that I like to try to keep in mind in these circumstances. So basically, I do think that we could see a little bit of a bounce going into tomorrow, Friday. But overall, I'm kind of thinking that at least for the month of September, maybe going into October, I have myself ready for a 10% correction in the stock market. Something else that I actually forgot to mention. And this was something that another YouTuber that I watch was talking about. But if you look at, let's just bring up the daily chart because it's probably the best representation of this. XLF. And this individual actually showed a couple of different bank stocks in general and how they just don't look very bullish at the moment. I think they were Bank of America and PNC. But if you look at the financial sector, we do have this pretty deep pullback, and this actually kind of looks a little bit like a bearish flag. And of course, we did have a little bit of a breakdown in price. Again, we would kind of need to see some more data to get the confirmation, but at least in my opinion, that looks incredibly ominous. Similarly, and this is IWM. If we look at IWM, this looks like it could be even an even better example of a head and shoulders pattern that's developing on this chart. Again, we did at least today manage to hold above the 200 EMA on this chart, and I have to admit, I was looking at this daily chart for IWM, and you could technically see all sorts of different head and shoulder type patterns all over the place depending on what perspective you're looking at. So, you could see that this was a shoulder, here's a head, and that's another shoulder. So it's basically been valiantly, I must say, holding above this 160 zone here. But it'll be interesting to see if maybe this is the one that really does it in for IWM, so to speak, just because it's kind of like printing out this giant bearish flag from where it dropped back in, I guess that was late 2021. Just out of curiosity, let's just see what it looks like on the weekly time frame. Yeah, it's kind of interesting to look at. But yeah, IWM in general has just been trading in that channel, in that range, and it really hasn't presented any sort of unique either bullish or bearish opportunities unless you really are interested in trading those ranges. So with that being said, I'll try to provide some more timely updates going into next week. We'll see how those trades work out, and we'll see just in general if I can get my losses all my futures trading under control as well. But thank you for tuning in. Please feel free to like and subscribe to this channel if you want to see more content like this. I would love to hear some feedback in the comments, especially with my bearish position. I've already gotten some I guess, stuff, for lack of a better term, about what I was kind of sharing on some of the other YouTube channels. But with that being said, remember, whatever you do, don't get margin called.